In today's video, we're going to talk about 3 things that we can assess before lending money to someone. Now, we've all been in situations where we've lent money to a friend that just never came back. Or on the extreme end of things, we've been in situations where we might have taken out a loan to help with a family situation and we just never got that money back. Just a quick disclaimer. First of all, I'm not a financial advisor and nothing that I say should constitute as financial advice. If you are looking for financial advice, you should speak to someone who is certified with the FSCA. That's disclaimer number 1. Disclaimer number 2, the 3 suggestions that I'll be giving here today do not apply to family. Why? Because family matters are very delicate. Every situation really, I think, should be dealt with on a case-by-case basis when it comes to family. But when it comes to friends, these 3 suggestions definitely apply. So I hope that you'll find value in them. I hope that they will serve as guiding standards for you and they'll help you in how you navigate whether you lend a friend money or whether you don't and how to deal with those kind of situations. Okay, so let's jump in.
The angels bow down at the thought of you. The darkness gives way to the light for you. The price that you pay gives us life brand new. Hosanna forever, we worship you. Hosanna forever, we worship you.
Firstly, let me tell you a little bit about myself and how I deal with situations that involve finances, friends and acquaintances and that sort of thing. I am very ruthless upfront in terms of lending money to friends or acquaintances because I know that I am very kind, understanding and generous in situations. So what do I mean by that? If I've borrowed a friend money and they, for whatever reason, are unable to pay me back, I'm understanding. For me, it's okay. In fact, I never even follow up with individuals who I've lent money to. Okay, so if I borrow someone money, I know I don't have the heart to be like, hey Tabo, you owe me. Hey Sfiso, you owe me. Hey Sfiso, when are you paying me back? I just don't have the heart for that. Secondly, I'm very understanding in situations where friends cannot pay me back for whatever reason. So to curb my kind nature, I am very ruthless upfront. So what do I mean by that? So I have financial boundaries in terms of how it is that I lend money to friends and how it is that I do not. Okay, so these are the principles that I'd like to discuss with you today. Before we jump into the 3 suggestions, I would like to say these are essentially what a bank looks at when it assesses a client for a loan. So this is essentially you becoming a bank in terms of being responsible in how you lend your money. So I think that's principle number 1 that's very important to understand. Principle number 2, I think this is about reclaiming power by setting financial boundaries. Now, what is a boundary? A boundary is something that has to do with you, that has everything to do with you, and nothing to do with another individual. So a boundary is saying these are the standards that I set for myself in terms of how I engage with other people. It has nothing to do with the other individuals. It's standards that you decide for yourself in terms of how it is that you are going to engage with other people. Now, when a bank receives a loan application, they are essentially looking at 3 things. And these are the 3 things that you and I are going to start looking at before we lend money to friends or acquaintances. Number 1, they look at your ability to pay. Number 2, they look at your willingness to pay. And number 3, they look at what will happen if you do not pay. Okay, let's start with number 1, ability to pay. Now, the way that the bank assesses that is obviously through your pay slip, your your 3-month bank statement. That's just to assess if you have the ability to pay back the loan that you are requesting. Now, obviously, we're not banks and we can't ask for our friends to provide a payslip. But if a friend says to you, hey, Lunga, borrow me 2,000, and this friend happens to be unemployed, then with all the love in my heart, I'm not going to do it. I'm not going to borrow you 2,000 because you simply don't have the ability to pay it back. That is not only putting me in a compromising position, but that's also putting you as the borrower in a testing situation because you simply don't have the ability to pay it back. Okay, so number one, you need to assess for ability. The individual who is borrowing this money, are they employed? Do they have the ability to pay this money back? Are they receiving some kind of allowance? Are they receiving some kind of stipend? Do they have the ability to pay me back? So that's number one, the ability to pay back. Number two, the willingness to pay back. Now, the way that a bank assesses your willingness to pay back is through your credit score, which is essentially a history of how you have handled debt in the past. So have you been paying your accounts on time? Do you default when it comes to what you owe? What is your likelihood? What has been your pattern in terms of handling debt that then helps me predict that you are going to pay me back? Okay, so number two is willingness to pay. So what is this individual's history in terms of how they handle debt? In the past, when I've lent money to this individual, have they paid me back? Now, in certain situations, obviously you don't have any history upon which to make a judgment. Now, for me personally, the way I do that, if someone is borrowing money, if someone is lending money for the first time, then I ensure that it's a small amount, number one. And number two, I ensure that it's amount that I am okay losing. So if this individual does not pay me back, then I'm okay. It does not break my back, but it gives me information about this individual in terms of how they handle their financial commitments. So for me, I always give someone grace for the first time, and if you do not pay me back, then you're obviously not gonna be getting any money from me in the future. Okay, so that's number two. Number two is you need to assess for a willingness to pay back. Okay, so number one is ability to pay back. So is this individual likely, do they have the capacity to pay me back? Number two is willingness. Has this individual paid me back in the past, or do they have a track record for paying back their debts? And what is the likelihood that they are going to pay me back? Number three, banks determine what will happen if you do not pay back your loan. So often with secured loans, there will be a thing called collateral. Okay, now collateral means that the loan that you are taking out is attached to some sort of asset, whether it's a house, whether it's a car, whether it's a camera. There needs to be a physical asset whereupon in the event that you do not pay back your debt, they can have this asset and they can liquidate it in order to get back their money. Now, although it's a very uncomfortable conversation to have, it's also very important for you to have that conversation upfront with someone you intend to lend money to. So, hey, Tabo, I'm Lunga. I know that I'm not going to ask for my money back. I'm comfortable with borrowing this money because I think that you're going to pay me back. You have paid back in the past, but in the event that you do not pay back, what must happen? Okay, maybe don't borrow me money again in the future. Okay, sharp. That could be okay. That could definitely be an okay thing to agree upon. Listen, you can have this item of mine if I do not pay you back. Whatever it is that the both of you can agree on as collateral for debt not paid, then it's probably a good idea to agree on that as well. Okay, now just to bring everything full circle, number one, you need to assess a person's ability to pay. Does this person earn an income? Do they receive an allowance? Do they have the capacity to pay? Number two, you need to assess this person's willingness to pay. What is their history when it comes to debt? Is this someone who pays their debts back? Or is this someone who simply borrows money and then moves on to the next person to get money from them without honoring their debts? And then number three, you need to agree on what happens if this individual does not pay you back at the agreed upon time and date. Okay, now these are my suggestions. I hope you guys find them helpful. I hope that they help you better navigate situations where you want to lend someone money, but you're also wanting to do so in a way that does not compromise you. Once again, I think these are healthy financial boundaries to have for oneself, to say, hey, these are my standards when it comes to lending money. I need to assess for an ability to pay, a willingness to pay, and what must happen if you do not pay. They've got nothing to do with the other individual. They have everything to do with yourself. Boundaries are intended to protect you. I hope this has been helpful. I'm interested to know, how do you handle situations where people don't pay you back? How do you set boundaries in terms of how it is that you lend people money? How do you handle situations where people do not pay back? I really would like to hear from you guys, and please drop your comments in the chat, and I'm really keen to just go through those. Okay, I'll see you guys next time. Bye.